For a check of the top business news stories, I'm here with our business editor, Kate Moody. Hi there, Kate.
Hi, Tom.
Let's begin with something of a legal victory for Amazon, and it relates to a major tax bill here in Europe.
Yeah, the EU's second highest court has ruled against a European Commission decision to seek 250 million euros in back taxes from the tech giant. In 2017, Brussels had found that Amazon was given special tax treatment that amounted to state aid in Luxembourg. The decision could still be appealed to the European Court of Justice, as Luke Schrago reports.
Amazon won't have to pay Luxembourg 250 million euros in back taxes. That's after the EU's General Court ruled that the EU Commission hadn't proven to the requisite legal standard there was an undue reduction of the tax burden of a European subsidiary of the Amazon Group. The case dated back to 2017, with the EU's official in charge of antitrust issues, Margrethe Vestager, seeking to clamp down on tax deals that amount to state aid. She accused Amazon of benefiting from an arrangement with Luxembourg, where its European operations are headquartered, one allowing it to avoid paying taxes on 3/4 of its earnings in the bloc. It's something Vestager has targeted for years, and she's forced Belgium, Ireland, Luxembourg and the Netherlands to change their practices of offering sweetheart tax deals to attract firms to their territory. However, pushing companies to shoulder their tax burdens proven harder, with a similar case against Apple going in the tech giant's favor last year. For experts, existing rules mean prosecutors' hands are often tied.
We need to take the current corporate tax system and throw it in the bin. The transfer pricing rules have completely failed. And there are negotiations going on looking at updating the corporate tax system, but unfortunately governments are not ambitious enough. We need a complete reform because these rules are clearly outdated.
That may be closer than previously thought. Washington recently embraced the idea of an international minimum tax on multinationals, with the Organization for Economic Cooperation and Development saying the world had never been so close to a deal on the issue.
And in a separate case, at the European General Court, the French energy giant Engie lost its appeal on a similar ruling about its tax arrangements in Luxembourg. It may have to pay 120 million euros in back taxes. Inflation in the United States soared to its highest level in over a decade in April. The Consumer Price Index jumped 4.2% compared to a year earlier. That's the fastest pace since 2008. Prices rose 0.8% compared to the previous month. It is the second consecutive month of high inflation. The Federal Reserve has said it will not raise interest rates or reduce its monthly bond purchases in a move to calm inflation because it believes that those numbers will settle closer to its 2% target within the coming months. Some economists, though, have warned that combined with the $1.9 trillion stimulus package, the high inflation is an indication that the American economy could be overheating. Well, that inflation data piled more pressure on Wall Street. After taking a breather on Tuesday, the tech-heavy Nasdaq has tumbled once again, down over 2 percentage points this hour. The Dow Jones down over 400 points as it continues a slide that saw its worst session since February. The major European indices managed to rebound earlier on as strong corporate results lifted trade. Shares of drugs giant Bayer and German lender Commerzbank up 7% and 8% respectively. Energy stocks are higher too as oil prices continue to rise, approaching a 9-week high. US WTI trading at about $66.34 per barrel, and the international benchmark Brent crude just under $70. This on strong global demand and the ongoing risk of shortages in the US linked to that cyber attack on a pipeline. That's all for now, Tom.
Thank you very much indeed. Kate Moody, our business editor. Thanks so much.